All right, let's get it, everybody. Welcome to Jeff Mackey Live. I'm Spencer Israel. The other guy, that side of the screen, is Jeff Mackey.
Hi,
Jeff,
folks.
we are all bowled up here this week. We went live last week, and you were like, "I got some ideas for this Amazon company. I think they should highlight all their amazing retail strength and maybe not talk as much about vague AI things that they don't know how they're going to translate to the bottom line." And wouldn't you know it, that's basically what happened. Stock ripped higher, all-time highs. We're a little bit down today, but who's
Yeah.
counting?
Yeah.
Um,
Well, I mean, it was a huge call. What I really wanted them to do is quantify it. And what I was super terrified about as a guy that's long Amazon was that it was going to be another call where we just raise capex and talk kind of navel gazy, basically kind of a meta call. Like those have kind of
yeah.
descended into a lot where it's like we're spending on this universe of stuff, or even Google for that matter, which is replacing kind of their business model. We this is a tough nut to swallow. This was one of the last points on the first page where cash flows went to an outflow of 7.6 billion due to a $66 billion increase in property, plant, and equipment. Those are hilarious numbers, leading to it compared to an inflow of 18 billion last year. Operating cash flow increased just ridiculously, like by $40 billion. So it's we're making a ton of money, and we've invested that and then some back into the business. Eh, that's a message that can only go so far. Last year, that might have gotten your stock excited. This year, it would get your stock destroyed, which was why it was so impressive, kind of the way they controlled the narrative of the presentation. That went immediately into the metrics, and that's what we needed to hear. Why are you spending this much money? My God, are you insane? And they were perfect. They had a lot of answers.
Yeah, the last time Amazon's free cash flow was negative was during that post-COVID like supply chain chaos, right? Where they were simultaneously trying to everybody was hiring up, right?
Yeah.
So they were hiring up, they were going crazy on the fulfillment center stuff, but everything was more expensive at the same time, right? So there were sort of these like macro shockwaves, and that was believe it or not, that was 4 or 5 years ago already. So it's been a minute. So I admit I was surprised to see a company like Amazon say, "Oh yeah, by the way, our free cash flow was negative." But as you said, and as the market is saying, the market is the ultimate voting machine, and the market voted and said we accept this explanation.
Uh,
So
Pretty much, a lot of that was that they can control their expenses as well. They said that the upside was really being kind of dictated by limitations on their ability to provide and to supply, and they're building kind of their own ecosystem that gives them more flexibility than the contractors out there. They're going to be married to all these. You hear about the deals all the time that may or may not involve cash, and there's stakes from one company to another, and outsourcing. Amazon's doing most of their stuff in house, and that gives them a little bit more control over the spend. But what they immediately quantified the business. I mean, it's AWS. They said something to the effect of, we always thought it could be a few hundred billion. Now we think it's twice that, maybe even $1 trillion business. That's bullish. That's hard to argue. They just kind of really really quantified what they're doing, and on top of which, the execution, to the point that we were talking about last week, they were ridiculous. They continue to be, almost as an afterthought, just an unbelievable company. Second largest grocer in the world now. Just oops. It was just something. Yeah. Oh, by the way, we figured out grocery. People have been trying to figure out grocery. This is like one of those weird math, kind of like one of those big long equations that the math geeks try to solve for 20 decades. That's kind of what grocery delivery has been forever.
yeah,
Amazon just kind of figured it out. So, online, their own stores were up 15%, third party up 16%. Stores, this is the number here, and this is what I meant about raising the bar. They came in with what amount to 4% comps in their Whole Foods division. That's really good for Whole Foods because it's been a pretty dead division for a while. But that kind of does a little bar setting. Remember, it's Amazon is a big economic tell. They're almost a Walmart in that sense.
yeah.
So it was there was a lot to like about the call.
So there was a lot to like. from Amazon, but then if you extrapolate, you can just say, hey, what Amazon is saying is the economy is doing all right. Right.
What Amazon is saying is yeah, they're giving you kind of all the clues you need in terms of what Wall Street wants to hear right now. They want to hear about very specific things that are already profiting. You're already making money on your AI spend. Amazon did a great job with that. They want to see that it's not becoming just a kind of fork in the road where you're forgetting your core competencies. Amazon did a great job with that, and that it's not a suicide pact. There's business plans, and there's just kind of the strategies of the world that just become a different thing entirely. Oh, we don't do software, we're a Bitcoin bank. It's Amazon stayed pretty much on task. I mean, they're doing fresh produce in 2,300 cities. That seems almost impossible, and crazy, and amazing. It's just very impressive. So the stock is now, we're here. It looks like an all-time high. You really want them to hold that all-time high. You don't want this to be yet another quarter where, as we've said over and over again about a lot of these consumer names, the announcements have been good. The earnings have been good. The numbers have been surprisingly robust in general, especially among the top performers. But when the company stops talking, everyone starts fretting. And you're seeing a little bit of that kind of, this has to be the morning after. I mean, Jeff Bezos announced he's selling some more stock, which, honest to God, at this point, that's like Trump announcing a truce has been declared. It Who's paying attention to that anymore? That's just a constant. Jeff Bezos is selling stock. I don't know why he's gonna buy a European football league or something. Who knows? He lives an extravagant lifestyle, and also, it's he's investing in some crazy stuff. He's starting enormous companies. I don't blame him for wanting to take some of his winnings and go play with that.
Uh, Probably my favorite trading or market cliche of all time is that there is nothing like price to change sentiment. I mean, it was last week, Jeff, where you looked at Amazon and you could have said, God, for a stock that's supposedly amazing, Mag 7, we've now gone nowhere for a year and a half. A year and a half of dead money, and then bam, in your face, right? Ripped new
Yep.
all-time highs. So a lot can change in the matter of a couple of days, clearly, as you can see here on the chart. And now all of a sudden it looks amazing, right? Like,
Yeah, now it just looks like higher highs. Hey, look at that. There you are. It held the old lows and just kind of made its way higher, just the way good stocks are supposed to do. We'll see if that lasts. I mean, it's was a huge swing in our fortune. The company is just so good, I guess, is the point, Spencer.
yeah.
There was kind of, you'd go through the closets and there was just nothing that disappointed or underperformed, or was less than anything sort of excellent, which
By
was
the way,
amazing.
the 37% AWS growth, that's year-over-year growth, is really just is cloud not the best business of all time? It might be the best business of all time because I don't understand how a business line as mature as AWS, right? And it's not like there was like anything too innovative about it, but they like it keeps on growing every quarter, every year, like clockwork. It is a modern marvel, the cloud business model. It really is.
Yep.
So
Yep. And again, and a lot of that they attributed to the additional spending that they were doing. So again, that
yeah.
connecting the dots of, we're going to quantify this business and tell you how it connects to that and how it connects to all the spending.
Right, right.
And again, it's just freaking a ridiculous quarter. It's as good as you're going to hear in terms of earnings.
Right. So that was actually the big question, which is all right. How is all this AI spending going to translate to revenue? And Amazon basically said, well, in our case, it's coming back to us via AWS, right? So that's a big connection of the AI spending circle. Also, they talked about their investment in Anthropic. All these Mag 7s have these investments in, whether it's SpaceX or OpenAI or Anthropic, and they're all coming out and saying, yeah, that is factoring into our earnings because we have massive gains in our own investments. So good for
Gains that
us.
honestly must make you feel old already, just because the numbers are just kind of bonkers? Oh, AI is a $25 billion quarter business now. Oh, is it? You've created a mid to large size S&P 500 type company just kind of out of investments. That's impressive.
Yeah.
That's not a bad throwaway line there. AWS is an amazing business. Prime is still growing 12%. That's huge for a very mature business. So you see these kind of it's not like they invented stuff. And I know the
Right.
Prime Day was moved, but they just kind of see problems and they solve them. To go to fresh grocery and Jassy, to the point before about having something in there for everybody in this call, we had something for the retail dorks. He was talking about how people that are using the fresh produce tend to buy 3 times as many items. That's just straight up dork grocer speak right there. That's good, and it's a really impressive metric. And again, 10 years ago, they spent a lot of times talking about all the capex they were spending on the supply chain. Now they
Right.
barely even mention it, but it's like, oh yeah, we're still doing that too, and we've kind of taken over
Yeah.
grocery.
Did they even mention the facility out in Illinois you talked about? That was from a few months ago. Did they
Yeah,
even
no, not really. It's
no?
just it'll be something they mentioned. Oh yeah, we made a Death Star and it's taken over, Chicago. It's the only place anyone shops there. It's just
Right.
something we did. I mean,
All right.
it's they reeked of excellence.
So they basically just dropped the hammer. What does this mean for the other big retail guns? We've got Walmart and Target both due to report in a couple of weeks. I think the third or fourth week of the month typically is when they're both out. Obviously, it's been a bit of a struggle here. Walmart was on an unbelievable tear there. Nothing goes straight up, so it has spent the past um, call it basically the whole year kind of consolidating after this
I
massive multi-year breakout. Let's bring the chart back up. You
really
have it
got
right there.
shot at the end of January and just
Yeah.
got pole axe and hasn't been able to find its footing since. It's got a date with 100 if they don't put up a really nice call. It's they're kind of starting to step on Amazon's toes, or at least they're getting in the ring with them. This grocery thing is definitely a shot across their bow. They've got their own investments. They've got their own sort of inflated capex given to the size of that they are. There's only a 4% comp kind of estimate here. We have enough evidence now that the consumer's not restricting its spending on stuff that's good, on stuff they actually like. So there's not really going to be a good excuse. These retailers have run. Have you seen Williams Sonoma lately? I mean, its target is the next chart we have. I mean, its expectations go up when the stock price goes with it, which is a related point to yours about sentiment. It's now that Target's 50% higher than it was at the beginning of the year. They can't just report another, hey, we did better than, go slightly out of business last quarter type of quarter. They actually have to put up some numbers.
Target seems like they're kind of in the boat now that Walmart was in like a year ago, right? Where the stock was just on a ridiculous run, and like at a certain point, like how much more could it keep going?
There people, it's still 20 times earnings. It's still I play Hamlet with this all the time because I'm long and in public and in reality. Those positions become kind of inflated with the market, but it's still not very expensive. It's still if what investors are really looking for and what they should be looking for are just improvements in traffic. You're not. It takes a while for you for Isaac Mizrahi to redo the entire fashion setup at Target. Now, will that pay off? Well, it paid off like crazy a few years ago. Target had clearly taken its eye off the ball, and that's where they get their incremental margin. That's ultimately what will save the PE. But yeah, I mean, it's no one's going to expect Target to say we're delivering to 2,300 markets in less than 3 hours with groceries. That's not what's expected of Target anymore. It's just the moms came back and are shopping again.
So in Target's case, you're saying they did all the easy stuff. So now they can't really say, "Hey, we're doing the low hanging fruit. We're cleaning up our stores. We're rearranging all that. That's already in progress or done."
It,
Right
it's
now,
been a year. It's been a year
right.
since Fidelity was announced, and the street just Bronx cheered it down 10%. And the all-time lows are for now anyway. The recent lows were kind of shortly thereafter. Has it become clear that he's changing things? He's improved a lot of the low-hanging fruit, but that's also what you can see in the stores, Spencer. People need to walk into these stores and actually experience a better like Target than they saw before. That's visible now. That's apparent when you go into the stores. You can see the traffic has improved. You can see they're selling more product. They still have a lot of road to hoe, and so as long as they kind of keep on steady improvements, I think that stock continues to work. I think the biggest risk to it is that it looks like it's just levered to the economy no matter what they do. And if God help us all if they come out with something that makes people protest again.
So I'm just trying to. It sounds like you're, at least in the short term, pretty lukewarm on Target and Walmart.
I think Walmart has a lot to prove. Walmart, if that gets to 100, I think that's where you finally say this is cheap enough that we can start buying it again. At 30 something times earnings, they have a lot to say. Target, I think for the long term, it's great. I would love to see lower expectations going into the call. I don't like to see it ramping into the call because it still is very much a turnaround story. They're not gonna announce that earnings will be much, much higher than expected in the near term or that spending will be down. They actually might beat on earnings. The bar is set pretty low. They comped last year negative and had put up negative comps for a lot of years in a row. So that 4% number for Target is definitely doable. A lot of the concern you're hearing is just someone who's long the company and wondering if I should just hedge the hell out of it before they report. Just to be perfectly honest,
Where,
I'm only human, man. Come on,
yeah, yeah, yeah.
I'm flesh and blood. What are you gonna do?
Hey, I've always said it's hard. It's much harder to manage winners than it is to manage losers, right? So
Yeah.
at least for me. All right, I think regardless, we can agree on the fact that Walmart and Target are not going to make the same types of earnings moves as Amazon just did, right? That was a monster earnings gap, and yeah, as I
The
said, we
Walmart for
are
sure isn't. Target could. I'm just not sure what direction that goes in. I think
all right.
Target will be fine. What we have is enough evidence that the consumer's fine and reacting to stories that they like. They're traveling. No one stopped doing stuff because gas prices rose for all the reasons and all the sentiment. They apparently stopped riding Ubers, but that's about
Yeah,
it.
yeah. The Uber, so Uber's down what 6.5% today. They just reported here overnight. Here's the Uber chart. I mean, what did happen? Tiny Toons Fiesta wants to know in the chat. What did happen here? It's been now going on 2 years, more 2.5 years of just sideways, mostly chop, with a couple of exceptions. You had the back half of last year when everything went up, right? And other
Yep.
than that, though, it's been kind of a mess.
They're kind of screwed on this whole narrative thing. I mean, it's just a real problem for them. They've been circling around autonomous like a driverless Waymo trying to find its ride, just kind of clueless. And so are you going to be the app that other companies use? That was the story with Waymo. That kind of went away. They're at a parting of the ways there. Everyone sort of agrees that autonomous is the future, and it's not clear how Uber's going to fit. There's plenty of ways they can fit, they should fit. They have a huge dominant share. It would be crazy if they miss, but it's their own little version of what Google's going through with the LLMs, which is like no one's going to search the same way ever again.
Do
Once
you
autonomous comes, no one's going to have an Uber driver.
do you disrupt yourself? This is an age
Right.
old business. This is the innovator's dilemma. It's exactly what this is, right?
Yep. Yep.
So
And it's a hell of a lot easier to do it when you're flowing cash at $70 a share than to be the fourth CEO after Dara comes in and tries to
yeah,
turn this thing around at seven. It
yeah,
seems super cheap, but they have to improve the story there. And there's
yep,
a lot of choices. Make one of them. Any direction's better than just holding still.
yeah. All right, Jeff Mackey, everyone. Jeff, you'll be live tomorrow on the morning show. I imagine we'll talk a little bit more about Amazon, maybe a little bit of Victoria's Secret. I don't
We
know.
got Warby Parker reporting tonight. They've been on kind of a heater, and so I saw Evan Spiegel on with refusing to put on the snap glasses because they're just absolutely unbelievably terrible looking. And Evan Spiegel is a very handsome man, and
Uh,
for him not to, for him his people to just be like, don't put him on, dude. Like you can't pull him off. I don't think they would look good on me.
Wait,
I,
what are you talking? Wait,
I,
wait. What are you talking about right now?
Evan Spiegel, the Snap glasses. It's that was competing with Warby Parker. They make the everyone's coming into the AI glasses. Snapchat has their own pair of glasses,
Right.
and that's
Yeah, I
kind of
knew
what they're
that.
betting the future on. Well, that's what
Yeah.
Warby Parker's story is. That's going to be where their incremental sales. They report tonight that stock's been hot. It's been absolutely on fire. Warby, baby, this AI on your face is going to be a big deal. You got to keep up.
Yeah, the Warby chart here. Well, let's bring it up here. It's been a minute since I looked at the Warby Parker chart. Actually, the glasses that I'm wearing now are from Warby Parker.
Well, you see that, then you should be paying attention to this. Look at that big cup. You know what that is? That's a company that just refused to die. Came out, got COVIDed, it's the free cash era ended, and they're kind of figuring out a way to make their way back. So it's a big quarter for them tonight, at least in terms of the chart. It's going to be back half loaded for improvements there. I think they can do it. I think they're a better company now than they were before. And as we talk a lot about, especially with consumer companies, these low margin, slow growth names, it's they can take some time, but they'll surprise you. If they don't go out of business, eventually you come up with something cheap and a business model that works, and they can just kind of crank out earnings. A glassware business glasses grows 4%. It grows like the same rate that people age on Earth. Everyone ends up with glasses. So a little improvement goes a long way in terms of your growth rate.
Sometimes the ultimate compliment you can give a stock is that, hey, it stopped going down, right? So
Right.
credit to Warby Parker, it stopped going down a long time ago, right? So credit
It's
to
a
them.
sustainable business. The
Yeah.
thing that should have died, it's who are those guys? I love it when people say, Warby Parker, it's what the hell happened to them? Well, it turns out they're kind of a good company, and the stock looks sort of good, like it wants to make a definitive, at least recent high, and make a big U on that chart.
Warby Parker was part of a giant wave of direct to consumer companies that went public in that post COVID boom. And many of those are no longer around, but this one is. So, to Jeff's point, they refuse to die. Companies that refuse to die very often become good businesses later on, right? So, shout out to rest in peace to Purple, right? PRPL, rest in peace to Smile Direct Club. They're not even on the thing. What is that?
Smile Direct Club. Holy cow.
Rest in peace to Casper. Is Casper even
Oh yeah, the great bubble, man.
Forget
They're
it.
gonna change the world.
Rest in peace to all those direct to consumer companies that didn't make it. Warby Parker still around. Credit to you. They make good glasses. All right. We'll see Jeff tomorrow on the morning show, bright and early. He'll be on around 9 o'clock Eastern time. We'll see you there. Thanks for watching. Jeff, I'll see you tomorrow.
All right. Peace out, guys.